What is going on, traders? We got a lot to discuss in this video, but before we start, like, subscribe, comment your thoughts below. Let's get into the video. So this week is going to be pretty interesting or pretty boring. We have a 3.5 day trading week. If you don't know, Wednesday, July 3rd, the market is closed half the day, and then July 4th, the market is closed completely, and then we do it all over again Friday. So yay, right? But as far as the interesting part of this week, we could be looking at a bear trap or a huge drop coming in for the market. Now, let's talk about both scenarios. So, if we're looking at what's happening tomorrow, Monday, we have ISM manufacturing PMI at 10 a.m., and then we don't really have anything else as far as the rest of the day in regards to news. So, if you're the type of trader that trades off news or pay attention to news, that's something to keep in mind. Now, if we're looking at the NASDAQ and we zoom out, right now we're on the 4 hour time frame here. And as you guys can see, we've been trading within this channel for a pretty decent amount of time here. We rejected here, we rejected here, we rejected here, and then we bounced here, we bounced here, and then look what happens here. We even bounced in this area here as well. But look what happens. We finally broke out of this channel, or we broke below this channel, and it's not looking good. I will say that much. It's not looking good if we stay below this channel. But it is important to note that we are still above the key level here, which is 19,900. We're still within this daily supply and demand zone, which trumps whatever the 4 hour time frame is showing us. So we can't be full blown bearish just yet. If anything, my recommendation, do what you want with this information, remain neutral. See how tomorrow opens up, see how tomorrow looks, and be neutral. If we start to break down, we break below 19,900, we can start heading towards 19,700. And after 19,700, we're heading towards this gap fill at around 19,600 on NQ. Me personally, I think we can go much lower than that, but we have to take gap fills very serious. I tell you guys all the time, gaps have very, very strong support and resistance, and the strong support on this gap fill is at 19,600. It's important to note that NQ and ES, they, despite what the triple Qs and SPY do, because SPY and triple Qs, they leave gaps all the time. Triple NQ and ES don't do that. They don't leave gaps open for too long. So that is something to keep in mind here. But for now, I have to remain still on or lean more to the bullish side here, and that we could be looking at a potential bear trap. Now, to confirm that this is a bear trap, we have to get back above 20,100 on the NQ, which is right back above the supply and demand zone, is right back within this trend. And then that at that point, we could be looking at newer highs on the way, which is around 20,500, right back up here where this guy is. If we want to go higher than that, then chances are we're just looking at all the way to the top of this channel. But we'll talk about that if we ever get close to that point in the near future. But right now, that is a potential move we could be looking at as far as a bear trap heading into the beginning of this week. Another thing we need to keep in mind, what happens on Mondays? If you're new to the channel, this may be news to you, but if you've been here before, then you're probably tired of this information. Mondays usually mirror what Fridays do. What does that mean? That means when Fridays are bullish, Mondays are bullish. When Fridays are bearish, Mondays are bearish. And what happened on Friday? Well, in the beginning, Friday, the market was rallying to the upside. Stocks were going absolutely ballistic. And then towards close, we ended up having somewhat of a sell off. So if we're going off that historical data, we have to assume that the same thing could be happening heading into tomorrow, where maybe tomorrow we see some upside. Maybe, just maybe, if we're repeating the same move, we just retest around 20,100 and then we break down, or Monday just is completely bullish into the holiday, whatever the case may be. But that is the move that I am looking at if we're going off historical data. Again, 19,900 is your key level here if you want to see more downside. More importantly, you want to hold 19,700 more than anything if you are bullish. And that is what I'm looking at as far as the NQ. We look at the daily time frame. Again, daily time frame trumps all. And right now in a daily time frame, we do have us an inverted hammer pattern. And remember what happened on the SPY. Let's look at the SPY right here. Remember why I showed you guys this inverted hammer pattern? I believe this was like Friday. Yeah, like last Friday, right? Last Friday, I showed you guys an inverted hammer pattern, and look what happened. And I told you guys, I was skeptical about it. But if it looks like the pattern, assume that it is the pattern until it is proven otherwise. Right now, we're looking at the same exact thing on the NQ, guys. The same exact thing. So something to keep in mind here. So we're a little in limbo here as far as being bullish and bearish. We're in limbo. Okay. We look at the ES. ES pretty much giving us the same thing here. We go to the 4 hour time frame. I think I showed you guys this in the last video, this inverse head and shoulders pattern. And I know if you're bullish, you're like really excited to see this, but majority of this move already played out. The measured move from the shoulder to the head was just really nothing, and we pretty much played out the majority of this move. But it's important to note that as far as the ES goes, we're in this daily supply and demand zone still. And as you guys can see, we zoom in, we see that bears tried to break below the supply and demand zone. This is why supply and demand zones are my bread and butter. Okay, they tried, and then bulls immediately stepped back in. And as you guys can see, we have this trend here. And even as the futures market is open right now, we're still staying above this trend. We're currently rejecting this trend. So you guys know I'm not making this stuff up. The futures market on the ES, as far as I'm concerned, is rejecting this trend. All right. Now, is this going to stay here? Don't know. But it is important to note, so feel free to mark this on your charts that this trend is very important. As long as we hold this, I have to remain or lean more to the bullish side as far as the SPY or the ES goes, and even the NQ goes. All right. So that's what I'm looking at as far as the ES. We're still in this daily supply and demand zone. We're still holding 5,500. I don't see a real reason to be hardcore bearish. I know everybody's freaking out. They're like double top and the market's about to crash and all that other stuff, but I still just am not convinced. I'm not. Call me a bear, a perma bull, whatever the case may be. But if you've been following my channel for a while, you know I go with both sides. If I gotta get puts, I'm gonna get puts. Whatever side makes me money, I'm gonna go with. But what I'm saying here is to be cautious. Okay, be very cautious. Do not jump the gun because someone said a potential double top is in. That's why it's called a potential double top, or at least that's why I call it a potential double top because no neckline has been broken, and we could easily just form a triple top, or we just get rid of the double top and create new highs. Okay, so that's why it's important to wait on those type of scenarios. But right now, ES looks good. ES still looks good. All right, so something to keep in mind. Now, granted, it's after hours, guys. Take this with a grain of salt. Just because we're rejecting this trend now, currently during after hours, doesn't mean we're not going to open up and just go straight to the ends of the earth. Okay, that is possible here, especially since we got news in the morning. And I don't know how much that news is going to affect things, but just keep that in mind as well. We look at the triple Qs. Triple Qs, pretty much showing you guys the same thing we saw on the NASDAQ, right? We were trading in this channel. We rejected here. We rejected here. We bounced here. We bounced here. We bounced here. So you guys know I don't make this stuff up. Not only that, but again, we're in a daily supply and demand zone. We still are closing above our key levels here on the triple Qs. We closed above 478 on the triple Qs. We give up 478, then we're looking at a move to 475 psych level. After that, you can be heading as low as 473, 470. Now, I will say that at some point in time, I do think we will have to retest 460. Do I think that's going to happen soon? Hard to say, but right now I think the focus should be for 70 if we are looking to be bearish. But right now, we're still in the supply and demand zone. I imagine if we're going to break further down, we need news. We need very bad news. Otherwise, if we just continue further down, then maybe it's off lingering news from last week. Who knows? But right now, triple Qs still can't say for sure that we're extremely bearish. Sure, we broke below this channel here. Sure, we broke below this channel here, but we can easily just gap back up, guys. We could. All right, we could just gap right back up, or we just retest at around 482 and maybe head lower. But considering that it is a short trading week, maybe we just consolidate. I mean, maybe we just do one of these moves for all the whole week. That would be very annoying. I'm hoping that's not the case. But maybe some people are hoping that's the case. Maybe they can get out their positions, whatever the case may be. But yeah, we could be looking at a boring week because it is it's a short trading week. So we will put that on the table as well. Your key levels here, as far as upside goes, 483. 483, me personally, I would like to see 485, us to get back above 485 psych level. After that, we can start heading back towards previous highs all over again. But I've seen this scenario play out so many times. I have 12 years trading experience. That's not me bragging. That's me letting you know, like, hey, I've seen this. I've seen this plenty of times. One thing about double tops that I do not like when the other top is just a wick. To me, I don't consider that a double top. I'm sorry, I don't. I don't really consider this a double top. At least it's not a strong double top. A double top with a wick, just like if I see a Head and Shoulders with a wick and one of the shoulders is a wick, I hate that. That's not convincing to me. That's not a shoulder, in my opinion. That's like a nub. That's like a nub. So that's what I'm looking at here. I don't really trust this, but and I don't see a clear neckline here. Maybe 470 is our neckline. I guess we can consider that a neckline for this double top here. There's no clear neckline here. I don't know. Maybe I'm wrong. Feel free to let me know in the comments below. But that's what I'm looking at as far as the triple Qs. We're still in this daily supply and demand zone, so I can't be full blown bearish yet. I still about 60-40 on the bullish side. Again, we could be looking at a bull trap. I mean, a bear trap here, guys. SPY. SPY. Same thing. 544. I mean, we're doing the same thing we did last Friday. We're doing the exact same thing. Last Friday, everybody was extremely bearish. Even I was expecting some bearish move this week, and we did get it, but it wasn't nothing significant. But last Friday, we saw the same exact thing happen, where we closed above key levels. We saw the SPY close above 544, and then immediately after, and that's when this actually, we go to the daily time frame. That's when this inverted hammer pattern was formed. This is exactly the same thing. We closed above key levels and then we ended up going higher. Who's to say we're not repeating the same process again? I'm just saying, guys. I'm just saying. And again, and it's important to note that we didn't create a lower high as well. Like we didn't. I feel like if bears really wanted to step in and break us down, they would have. We would have at least created a lower high. Not a lower high, a lower low. I'm sorry. A lower low. But this is just not convincing me. And I could be wrong, that's fine. But right now, we look at the SPY, we look at the triple Qs, we look at the NQ, we look at ES, they're all closed above key levels. They're still above key levels. Maybe the news in the morning changes that, but for now, it's you can't jump the gun. I just can't jump the gun yet and just be like, oh, bearish. Look where we are. I mean, look how beautiful this is. Bulls are still here. I'm seeing videos saying bears are taking control, are in control, and everything. Where are bears in control here? Where are we seeing this? Where, let's go to the daily time frame. Where are bears in control? Because we have one big red candle, that means bears are in control. Like, come on, guys, come on. Let's be honest here. Let's be real here. Let's really use our eyes here. Where? Because we have one huge candle, that's bears being in control. I don't know. That's who you guys follow. But regardless, it's important not to jump the gun. It's important to be neutral. At least for me, I'm going to remain neutral here. We could be looking at a bear trap here. There's still plenty of space to the upside for the SPY. I have to lean bullish here. Let's look at Bitcoin. Bitcoin. I was about to say Bookcoin. Bitcoin. I showed this in the Discord weekly time frame. Bitcoin's not looking too bad. Like it looks like it wants to see upside again. And you see me guys mark this here. We could be looking, look how bulls stepped in. And if we're using Bitcoin as a leading indicator here, Bitcoin's going up. And when I say a leading indicator, I mean a leading indicator for the market that the market could be looking at more upside here. We got a potential double bottom forming here. We got a bottom here, a bottom here. Again, the neckline is up here at around, I would say 74K. We'll say 75K. Bitcoin looks like it wants to, if unless Uno reverses us, it looks like it's trying to form a double bottom here on the weekly time frame. That's all I really have for Bitcoin. So really pay attention to Bitcoin here. We got pretty close to our first target of 57K. I told you guys 52, 42, 46K, but this thing looks like it's not trying to do that. It doesn't. And I'm fine with that. I'm perfectly fine with being wrong. I am not a crypto head. I don't care as much about crypto as I do stocks. That's fine. I'm just here to help you guys out. And right now, this weekly chart is screaming that it may want to, the way these bulls are stepping in here. Hopefully, you guys can see these wicks. I mean, there's tough down here. I don't think the news tomorrow is going to be enough to just plummet this thing. I don't. I just don't. So, something to pay attention to here. Watch how we close the week on Bitcoin. This could be very, very good. If this week closes like if this closes green, I may have to like dibble and dabble in some crypto at this point. Because I've been waiting for an opportunity and I've been very patient. So that's what I have for Bitcoin. Now, As a trader, I really want you guys to understand something because I see a lot of traders do this. As a trader, you need to have an options chain. Why am I seeing traders without using options chain? You should not be trading without an options chain. I don't care if it's Weeble, I don't care what you're using. There's no reason why you as a trader should be trading without using some options chain. The reason being is because options chain is what institutions trade. Simple as that. All these trades are institutions. All these trades are millionaires and billionaires trading. These are the guys that move the market. Why wouldn't you want to trade like them? Like, think about it. Like, why wouldn't you want to do what the market makers are doing? Why wouldn't you want to do what the guys that are moving the market doing? Well, doesn't that make sense? Like, that should make sense, right? That you should be wanting to do what they doing. I see too many traders pick the most terrible contracts in the world and wonder why their premiums are getting decimated. Because you're not trading what the institutions are trading. You're not trading the contracts that they are in. Whales, hedge funds, whatever you want to call them. So just something to keep in mind. But that's my little rant here. You need an options chain, people. This is not me advertising unusual whales. I promise. I don't care what you use. Use the options chain. Otherwise, you're just trading with one eye closed. I don't even know if that makes sense, but you get the idea. So, if we're looking at the spy on unusual whales, this is another reason why I'm a little skeptical about more downside this week. And I could be wrong. I could be wrong. This whole thing can change. Maybe they just start jumping into puts in the morning, whatever the case may be. But we see here July 1st, 550 calls. July 1st, 547 calls. 12 million premiums for both. Wait, no, 12 million premiums for the 547 calls, 6 million premiums for the 550 calls. Hopefully you guys can see the premiums, right? This 415 put, yes, it has a 2 million premium, but it's all the way in August. Okay. 548 calls, July 1st. 546 calls, July 1st. 545 puts. We're below 545 already. So this is already cashed. This probably is already cashed out. If not, maybe we'll see a little more downside. 549 calls, July 1st. And any other puts, they're pretty close to the money. The lowest we're looking at is a 540 put with a 1 million premium. But as far as the calls are just, the call premiums are insane. They're very high. We even have a 551 call for July 1st, guys. Okay. So something to keep in mind here. And any puts we do have, they're very close to the money. So do what you want with this information. This is why I think it's important to have an options chain. Because if I'm going to be bearish or bullish on the market, I need to see the options chain, the institutions, the whales are agreeing with my TA. And you should want to do the same. You should want to see that institutions agree with whatever your sentiment is on a particular stock or whatever the market. All right. We look at the flow alerts. We look at SPY. Or we don't look at SPY. Okay. Don't know what happened there. There we go. 550 calls, 557 calls. That's a low premium. We don't worry about that. 547 calls. July 1st. The 550 calls are for July 2nd. The 545 calls, they were for June 28th. But I mean, the 434 puts very low premiums right here. They're at 140K. We're talking about millions in premium. We want the million ones. We want the big money plays. Okay. Um, 548 calls, 4 million premium. 546 calls. That's for June, but these are for July 3rd, guys. I mean, and even when you have puts, they're all very close to the money. You don't see anything that's insanely out the money. I mean, if you want to look at this 527 put for what, July 3rd, it's only an 18K premium, guys. So even institutions, they don't seem bearish at all to me. And again, that can change. That can easily change tomorrow morning. Maybe some news drop and they just change their mind. Like, oh no, we're out. Okay. That can happen. I mean, we can keep going. We can actually look at the triple Qs as well. Qs, 484 calls, July 1st, 487 puts. That's in the money. We're already below 487. We're at literally 479 after hours. 486 calls, July 2nd. 484 calls, July 2nd. 479 puts, we're already there. 483 puts, we're already there. 482 puts. So, I mean, at 488 calls, I mean, the list goes on. So any puts that we are seeing, they're very close to the money, and we already pretty much are in those. So hopefully that makes sense. Okay, so that's what I'm saying. Everything as far as if my TA is bearish, I want the institutions to reflect that. You should want the same. So get you an options chain. I don't care what it who it's with. Get you an options chain. Otherwise, you're just trading blind. And this is why you have terrible contracts and you have terrible trading sense. And you're not confident in your plays. This should help you build confidence in your plays. Knowing what institutions, whales, hedge funds, the guys that are moving the market are doing, and you being in the same trades as them will should more than build your confidence in your trade. This is why you close your trades early. This is why you get out of your positions early because you don't trust yourself. Simple as that. So if you don't trust yourself, trust the guys that's moving the market. Makes sense to me, you know. So that's my little rant there. Let's go over some stocks. Meta. Meta looks like crap. Okay, Meta looks like it wants to see downside here. I will say that much. Let's actually. I may be off. Actually, maybe a little bit. So this is a toss up here. I'm not gonna lie. Okay, Meta could go as I want to see Meta get back above 505. This candle right here is very bearish. This is a bearish engulfing candle. This might be a dark cloud cover pattern. Yeah, Meta looks like it wants to see the abyss. I would try to adjust. You have to do this on your own though. I mean, there might be hope here. There might be. Um, but right now we're below the supply and demand zone. This is a 4 hour supply and demand zone actually. Um, and if we do just so happen to break lower on Meta, I would say if we break below 500, chances are Meta is heading to 490. Lowest I'm looking at is around this gap fill at around 478. We'll say lowest 470 to be really safe. So Meta is not looking great, but it's not looking bad either. Like it's not looking terrible either. I guess I kind of over exaggerated this beginning, but yeah, it doesn't look too bad. It doesn't. All right. Best case scenario, again, you want to see Meta get above 505. I would say 506 if you really want to be safe. If it starts getting back in this area here, I would say 510. If it gets above 510, I think you're pretty safe as far as Meta goes. And I think you can start seeing a move towards 530 at the top of the supply and demand zone. So just be careful with Meta. All right, that's what I would say. Be very careful with Meta because it's still here. It's still below the supply and demand zone here, below 505. So you want to see it to get back in this area. That's really what I have for Meta. There's nothing really crazy to talk about here. It's in this channel. It's trading in this channel. It's below the supply and demand zone. It's still holding this channel, I guess. But how this candle looks is pretty scary. So I imagine if anything, again, this is why I say the market could gap up to prevent like this type of damage. Because if Meta gives up, then I imagine like a lot of Mega Seven are going to start giving up. So yeah, um, Apple. Apple still looks fine here. Apple got a price upgrade to 250. So either we sell off to 200 on Apple to, make it cheaper for the big guys, and then we start running to 250. I would hope that happens, but I don't think it is. But if it does happen, your key level here is 206. You want to see Apple break below 206. That way we'll get into this illiquid, very, very illiquid area right in this area here. And if we start getting into this area, then chances are we're heading to 200 and 200 between 200 and 196. I told you guys 200, 196, that is your buying opportunity. That is your buying opportunity. Absolutely beautiful buying opportunity. Okay? Absolutely beautiful. I would be looking to jump into leaps at that point. You do what you want, but that's what I'm looking at. But Apple did get a price upgrade to 250. I already told you guys that the highest I think Apple can go is 250 before that price upgrade even came in. So why you didn't hit the like button or subscribe button yet after how spot on I've been on these stocks and these picks and everything, I don't know. Okay. That's what I have for Apple. 206, as long as it stays above 206, gotta be bullish on this thing. 220, it starts breaking above 220, you're heading to 230. Simple as that. Next, Amazon. I told you guys if Amazon hits 193, beautiful buying opportunity. The lowest Amazon can go is 188, in my opinion. I think Amazon can potentially go that low. It all depends on how we open tomorrow. Again, be very cautious tomorrow. Just see how things play out. Wait till 30 minutes after that news drops and then go from there. Do what you want with that information. That's what I plan on doing. But right now, I told you guys in the last video or two that 193 is a good buying opportunity, in my opinion, for Amazon. If you want to see what I'm doing as far as my plays, Discord link is in the description below. But that's what I'm looking at for Amazon. Worst case scenario, you do one of these moves. If we just so happen to break down tomorrow, this week, whatever the case may be, worst case scenario, you hit this trend once again at around 185 and you start heading higher. Lowest I think we could potentially go is just 188 and then we start to head higher. Still think Amazon is going to above 200. I still think it has plenty of space to go higher. I mean, look at it. We zoom out. I mean, look at this thing. Look at how much beautiful space we have up here. So I think it's still on the table. If anything, maybe we consolidate above 193 until the market makes a decision. That is another scenario here. But again, worst case scenario, we drop to 190, 188 on Amazon. Tesla. Tesla, worst case scenario, it starts heading towards 192. It retests this trend. You guys see it here. I didn't make it up. Rejection here, rejection here. You broke above it. You're starting to break higher. And then again, worst case scenario, you just hit this top of this trend here at around 192, and then you start to break higher. And I think Tesla can go as high as 220. I said this before. We look at the options flow as far as Tesla goes. Get you an options flow. Stop playing around. All right. Stop trading like a noob. If we look at the options flow on unusual wells, 217.5 calls. You got 202.5 puts. That doesn't matter. This doesn't matter. 212.5 calls for July 5th. 217.5 calls for July 5th. 200 puts doesn't matter. We're already below that. 217.5 calls July 5th. 205 calls. That was June 28th. That already passed. I mean, you guys see it. All these puts are already in the money. So whoever's doing these puts, they're already in profit. Doesn't even matter anymore. You care about the out of the money puts. If we start seeing like 180 puts on Tesla, like and huge premiums of it, that's when you worry. But right now, Tesla, I told you guys, my price target on Tesla is 220. 220 calls, July 5th. No, that's the volume. Okay, so we're fine there. 200 calls, July 5th, 200 calls, August 16th, 210, 205, 202.5. Now, I want you guys to pay attention. 202.5 has a lot of puts. 202.5. So that shows me that 202.5 is your strongest resistance. We get above 202.5, we're heading to the moon. Start packing your bags, okay? Pack the bag. You should have your bags packed already, because I mean we're already going ballistic on Tesla, Tesla. So yeah, that's something I will be looking at. My first target on Tesla, you want to see 202.5 break and hold. After that, you're looking at a move to 205, 206.5. I believe that's where this gap is. Yeah. So 206.5, we'll say 206.5, 207. After that, 210, highest again, 220. That's simple as that. SMCI. SMCI looks fine. It's just Uno reversed me, so yeah, I'm done with this thing. It's like AMD. It's another arch nemesis. So yeah, that's what I'm looking at as far as SMCI. I mean, it looks fine. Worst case scenario, it hits about 800. Where's this trend at? 800, 790, something like that before going higher. But yeah, I think SMCI can start heading towards 1300. I do. That's one of my price targets. Do what you want with that information. That's all I have. I don't want to like keep dragging this video along. We can look at IWM. I think IWM is going to head to 210 in the near future. Inverse head and shoulders pattern is still in play. You got your shoulder here, your head here, your shoulder here. IWM is the Russell. In case you don't know, IWM looks absolutely amazing. I think it's going to head all the way up here, maybe most likely higher in my opinion. I still think it'll hit 210 regardless. It breaks above here, this thing is going to go parabolic. Simple as that. That's all I have for this video. Hopefully you guys got something out of it. Until the next video, traders, have a good one.